Hey everybody, Craig Bossy here, and we're going to talk about what is the mortgage rate, my one of my favorite subjects. First off, there is no the mortgage rate. It's kind of like this, the Loch Ness monster. It just doesn't exist. There's a lot of factors that go into mortgage rates, and the news makes it sound like the rate went up, the rate went down. They're kind of talking about average rates for for a 30-year fixed loan. But we'll get into some of the things that might change your rate. So, a few things that influence the rate: the property type, what is the condo, multi-unit, single family, or a PUD. All those can change it a little bit. Condos are going to be more expensive than single family, multi-unit. There's add-ons there too. Property use, investment, second home or primary. Second home, primary, typically the same. It can depend on the program. Investment's always higher. That's considered a higher risk. Credit score, obviously, most people know that. Your amount of down payment, that's going to influence the rate. If you put 5% down versus 50%, there's going to be a big difference there. Loan amount, jumbos, high balance, conforming. Um, Typically, conforming loans and jumbos are kind of neck and neck. Sometimes jumbo loans will be lower. Right now, a lot of times they have been recently, but that can change up and down. High balance is that for counties kind of like Contra Costa County here, where you have a above a 453 loan amount, um, up into the 700s, where that's a high balance loan, and there's usually a little bit higher rate on those. Type of loan: FHA, VA, conventional, jumbo. Um, Not much more to talk about there. A rate lock period: rates can be fixed for 15 days, 30 days, 45 days. So it depends on how long that contract is for. The longer the rate lock, the higher costs that go along with it. Fixed or ARM loan. It's pretty self-explanatory there. ARM loans are usually usually lower in rate, but not always. Secondary financing: if you have a second loan behind the first, there's an add-on for that in most cases. And also discount points or rebate. That's a big one, I think, that a lot of people don't understand. We can almost give any rate that we want to give, but it might cost you a lot in extra closing costs. So essentially, what you're doing is prepaying the interest at closing and getting a lower rate for that. All right. If you have any questions on this or anything else mortgage related, please reach out to me. And thanks for watching.